Hello, welcome to this week's FX update. Plenty going on this week, not surprisingly. We'll start with dollar CAD. It had something that I always really like, a buy as a continuation pattern on Monday. Broke out through the week and hit a profit target because it was Friday at 134.59, which was 3 up on the range deviation pivots. So some profits booked there. Onto the dollar index. No safe haven buying for the dollar. It's normally the way that when there's stress for whatever reason, the market decides to buy the euro, partly due to the negative yield, a bit like the yen, so it becomes a carry trade. So there was a negative at the end of last week, but it had to take out the weekly zone, which it has sort of done, which places us back in a big piece of sideways. So ultimately it was a false break. Onto the euro. As usual, we've got the inverse signal, so quite a few things coming up towards the end of last week and the beginning of this week, and then on Thursday panic sort of set in and it broke out through that weekly level at 109.10, which was required to hold any bounce if we were going to maintain any pressure. So that's also back in sideways. Onto the yen. Big week in the yen as well, as we know, like the euro. Stock market weakness means everyone heads for the hills, gets into the yen. So a major signal on Monday, so that's a slam dunk and a bear cage on the same bar, which is pretty rare. And we've accelerated lower and almost reached the first downside target, which is 107.64, but some partial profits can be taken just on towards the close today. There's a big level at 107.31, so that needs to be kept an eye on next week. To the pound. There was a minor positive at the end of the previous week, but not at support, and pretty quiet, but a poor day today, and target 124.44, but it's not really the one to be in. Where the action is, we talked about the euro pound over the last couple of weeks, and that's really where the action has been between the two. So we had those positives the week before, and I talked about how spot hadn't reached its final, perfect level, but in fact the futures had. So I'll just show you that futures again. So major buy signals at a very, very powerful support, which was the weekly level, and then another buy on Wednesday, and we've just accelerated up, and we've already hit a major upside target, 86.13. 86.68 is a big barrier. It does feel like it's a stock market trade as opposed to a currency trade though. Onto the Aussie, big week on the Aussie as well. Had a negative, I've talked about it before, sells as continuations or buys as continuations. So the trend is already down, says the trend is resuming. We closed below support, extended lower throughout the week. The key really was on Thursday, where there was a positive building and the short-term level was 67.80. So if we'd have managed to close above 67.80, that would have, sorry, let's get my big figure right. Sorry, 65.80. Hold on, let's just get my big figure. I'm terrible at big figures. 65.80, isn't it? Yeah, 65.80. So if we'd made a daily close above 65.80, that would have been enough to say, right, fine, out of the entire short position, but it didn't. And then overnight, got up this morning and it had all collapsed again. Bit of a sort of panic sell down. Worthwhile taking some partial profits just because things are so volatile. There's no harm in taking some money off the table there. Kiwi. Actually, just one thing about that Aussie, that pink, that blue square is a slam dunk signal, but when the trend is already extended, it's extremely rare on currencies, and it's actually more likely to be an exhaustive move, so definitely a profit taking point. We had the same on the Kiwi, but it hadn't broken support, so it felt that the Aussie was the better trade, and that's actually proved to be the case. But if anyone is in the Kiwi, much the same as the Aussie, time to book a little bit of profit. Okay, so we'll leave it at that.